Okay, in this tutorial, I'll be going through with you symbol OFX, and I'll just copy that and I'll paste it and write the talk beside it. The information on the left hand side is from Google, and the information on the right hand side is from Wikipedia. If I want to buy the stock right now, I can buy it for 76.3 US dollars, and I can see it is founded in 1975. And okay, I'll just go to MacroTrend website. I have left the link in description. I'll click on price ratio and then price book ratio, and then paste the symbol and make sure that the name matches. I'll click that. Okay, I'll explain you briefly what that is. Book value is the real worth of a stock. Stock price is the market worth. So, for example, if the book value is $1 and stock price is $2, that means that you're paying $2 to buy something that is $1 worth, which is expensive. So we need to make sure that the price book ratio is, if it's less than 1, that means that you're getting the stock at discount, you're buying at bargain. And if it's 1, that means you're buying the stock the same value, so you're not buying the stock expensive or cheap, so it's the right price. And if the stock price book ratio is more than 1, that means that you're buying the stock expensive and you're paying more than what it's worth. If it's the more higher the number goes, the more expensive it gets. Right now it's 10.87, so you're paying 10.87 times more money. And so it's 10 times or nearly 11 times more expensive right now. If somebody buys right now, it's in May 2000, it's like 5 July, right? And the cheapest it was in 2012 September, it was 3 times more expensive. Right now it's 10 times more expensive. So you need to be careful. So we have data from 2006 only. Let's have a look at other ratios. And if I look at current ratio, this ratio tells me that if assets are more than liabilities. So if the ratio is less than 1, that means that the stock is very risky. It's very risky to invest because there are more liabilities. If the ratio is 1, that means assets equal to liabilities. But we are looking at margin of safety. We want to invest when the stock is not risky, when we have safety, when it's secure. So the ratio we're looking at is 1.5 or more than that. Okay, so we are looking at 1.5 or more than that. Right now the ratio is 6.21, which is brilliant, which is a lot more than 1.5. Let's see the previous trends. So it has always been above 1.5, and only in 2009 December it's 1.43, which is just once off, and it's a little bit less than 1.5, so it doesn't matter. And that's brilliant. So it was, since the data we have 2005 till now, it's more than 10 years, like 12 years. It's always been above 1.5, so which is brilliant. It means that the stock is not risky, it's secure, and there's a lot of margin of safety. Let's look at debt equity ratio. If the firm, this tells us if the firm is mainly operating on long-term debt or equity. We want the ratio to be 0.5 or less than that for it to have a margin of safety. Let's have a look. So we want 0.5 or less than that. It's 0.01, which is a lot less than 0.5. Let's go back. So it's 0 consistently, and then it's 0.04, and then 0. So it has never, we have data from 2005 up till now, so which is more than 13 years data we have, and it has been consistently below 0.5, which is ideal, and it makes good, like it's like good margin of safety. It's secure to invest in, there's no risk at all, so it's brilliant. And let's look at return on equity. Return on equity should be 8% or more than that, ideally. Okay, right now it's 30%, which is a lot more than 8%. And let's look at the previous trends as well. So we have the data from 2005 up till now. It has always been above 8% consistently, which is brilliant for the firm. I want to see if this stock pays any dividend. I'll just paste this and write stock besides it. And in Google, it says dividend yield is 1.47%. Even though the percentage is very small, but dividend yield suggests that the firm is able to generate enough money that it can pay off its costs, its creditors, its costs, and everything, and still it has money left that is given as dividend in the form of dividend to shareholders. So it's extra money. So if the firm has a dividend yield, that means that it shows that they are doing financially very good. They are very strong financially, which is brilliant. And I want to look at the market cap, which is in millions. It's like 770 million, which means it's a medium-sized company, which is very good. And I want to see what the employees have to say about it. So I'll type in Indeed reviews. So people who work there, what's their point of view? It's 4 reviews, which is not much to judge a firm. It's very less reviews, so I'm not sure if we can just take the 4 stars really good, but 4 reviews is very less. So we need to be careful about that. Let's see in Glassdoor. In Glassdoor, we have 3 reviews, which is very less, and it's 4.4 star. The stars are good, but the reviews are very less. So that's why, and let's see if it has any patents. I have left the link in description. I'll just type in here and paste it and search it, and there are patents. I'm interested in assignee and applicant only because those are people who have this is applicant, that's assignee, because these are people who have the full rights of the patent. I'm not interested in inventor because they have invented it but they don't have the full rights. So it has patent in 2004, 2006, 2001, 2004, 15, yes, 8, 15, 8, 13, and so on. And I'm also interested to know if they have recent patents in 15, 16, 17, 18, and 19, because sometimes the firm starts innovating when they are formed and then they stop innovating. So I need to be careful about that as well, about recent patents, which is very important. And you can just go through yourself, and that's very important because patents reflect that they are doing innovating consistently. They are up to date, and they are trying to outbeat its competitors, and it acts as a moat, so they are very important. And lastly, I want to go to Yahoo Finance, and I want to have a look at the key executives, and I'll just search that, and I'll go to profile, and I can see the sector, which is industrials. Industry type is diversified industrials. Full time is 151 employees, and I can see the 5 executives. I can search that in LinkedIn and stuff, and I can see all their salaries, which means that they are very transparent. They have shown all their salaries. This builds trust, and which is brilliant if some firm shows the salaries. So this is brilliant. And what else I have left?